Hello, everybody. So we are finally getting some earnings action in this middle of August with disappointing earnings so far. Celsius reported, and Celsius is doing very well. The Alani acquisition was the right thing to do, and the stock is up 22% in pre-market right now, actually 24% as I do a print screen of pre-market right now. The revenue growth for Celsius was outstanding at plus 83% year over year. Now, keep in mind, a little less than half of that is because of the tack on of Alani. Alani was added. If you look at the underlying growth, it's actually in the 40% range. If you take both Alani and Celsius together, they're actually growing sales at about 40%. But Celsius, the company, is showing 83% year over year growth because they did this right acquisition of Alani. That was a very, very good move. Alani, the woman-focused energy drink, which is almost working better than Celsius. And Celsius is already doing very well. Celsius is this kind of gender-neutral, replacement to coffee. I've made a lot of videos about Celsius. All of these energy drinks are trying to go after coffee, but Celsius is kind of a drink that, you have in the morning, you have in the afternoon, young, old flavors that are very social media aligned. This is how these companies win. They have social media aligned flavor. People see it on social, and then they buy it in the store. They're really Gen Z's favorite, and of course millennials as well. I would argue lots of millennials. Anyways, the company's doing so well. Gross margin 52% almost, right? This is outstanding. EBITDA margin growing at 26%. They have two brands, and they're roughly the number 2 or the number 3, depending on what you look at. Number 9 brand in the US for liquid refreshment. We're not even talking about energy drinks. For liquid refreshment, we'll see that in energy drinks, they are cementing their position as number 3. And it's a company that eventually, I think, will start to compete with Monster and try to be number 2 eventually. We're not there yet. But anyways, if you look at the portfolio, of course, they have all of these energy drinks. They recently launched something with electrolytes, like for workout. That was also pretty successful. Alani, they have of course the traditional Alani, but they also have, like I said, workout supplements with protein. They have protein bars. I'd be curious to see if we're gonna get like a Celsius protein. Anyways, the product is doing very well. The product is resonating with the young consumer. Their strategy, of course, is to attract new customers. They want to attract all customers, and so they have this marketing that is a little bit softer marketing than Redbull and Monster. Redbull and Monster, their main competitor, have a marketing that is, it's very manly marketing, and it's saturated. The extreme manly man marketing of Monster and of Red Bull is saturated. It's a red ocean. To use the book Blue Ocean, it's a red ocean. Everybody competes on extreme. Nobody's competing is in that kind of softer end of the market, and that's why they're able to get a lot of customers. And you may have seen my videos where I look at kind of the marketing of Monster and Red Bull compared to the marketing of Celsius. Yeah, if only all it took to defend yourself against Celsius was to make your beverage pink, but it's more than that. It takes more than that, and so they've done a really good job, I would argue. Look at the revenue. So if you look at just the product, we're just talking about the product. The products together, revenue growth is 41% year over year. If you look at Alani and Celsius, and you look at Q2 25 to Q4 from Q4 24. From Q2 24, sorry. Anyways, year over year, Q2 25, you just look at the brands, that's 41%. However, if you look at the company, like I said, it's 83% because of that acquisition. So they're doing great. International plus 33%, but they just have Celsius, right? I think it's mostly Celsius right now in international. So they will add Alani International eventually, and international will be a thing. Celsius is getting launched in Europe, and look at that. Adjusted EBITDA growing 49%. I like to see adjusted EBITDA grow faster than revenue because that means we are getting operating leverage. If you look at the industry trackers and the trackers at the retail level, at the sales level, you can see Q2 was their highest quarter ever. And really, indeed, the slump of Q4 24 was really indeed just an inventory issue, like they had told us. And to me, that was pretty clear because, like I said, these sales are very flavor-driven, and sometimes some flavors sell out, other flavors sit on the shelf a little longer. But anyways, that's the market for you. If you look at the market share, Red Bull is flat. Red Bull is obviously the leader. Monster is actually declining in terms of market share. That doesn't mean Monster absolute sales are declining, by the way. We're just looking at share here, at dollar share. So what it means is that the market for energy drinks is also growing. This is kind of all credit card companies going after cash. All energy drink companies are going after coffee and coffee drinkers. And so they are clearly growing share. They're clearly, in my view, taking some share from Monster. Red Bull, it's a private company, so we can't really invest in Red Bull, and it would probably be too mature for me to ever be interested in Red Bull. I want the challenger. I want the high growth stock, the high growth company. This is what this channel is all about, high growth. So the acquisition was a master move. There is nothing more to say. You feel free to go watch my old videos about the acquisition. I was very pleased with it. I think they paid a good price. I think that was a great move. They have now cornered any non-stereotypically male energy drink. Celsius has cornered, and Celsius owns, and so that's a big deal. They're gonna make a lot of money, in my view. And let me conclude with the valuation. Of course, today we celebrate the plus 22, plus 24% in the share price, but that's short-term price action. And we're not options trader, we're not day trader. We don't care about short-term. We care about long-term. I care about long-term price appreciation. If I look at Celsius for the past 5 years, it's up 983%. So, a 10x, right? Celsius has done a good 10x in a 5-year period. Of course, the goal for Celsius, to me, the frame of reference, why would I want a beverage in my portfolio, and why would I want to pay more for a beverage company in my portfolio? Well, it's the Monster return. If you look at the Monster return, Monster has just done so much better than the Nasdaq since 1995. Monster is actually one of the stocks that has had the best return, and so of course the reference is Monster. If they can beat Monster, this is a portfolio that I can sleep well at night. This is a stock, sorry, that I can sleep well at night, have in my portfolio, and just let it do its Monster trajectory. Beverage is great. Beverage is very high margin. It's a very high margin business. It's much higher margin than food. It's sticky. Customers associate a beverage with their generation. Once they love a beverage in their youth, they stick to it for their whole life. Typically, it creates a great economic rent. You can raise your prices. These beverages. I mean, it depends on which store you go, but they're less than $2 in general, like $1.75, $1.80, maybe $2 if you want to pay a little more. But you can raise prices fairly easily on these. The average consumer doesn't really care between $1.89 and $1.79, so you can raise the prices on the average consumer on this over time, right? That's how Coca-Cola has been able to keep up, for example. If you look at gross profit and EBITDA margin, so like I said, it's very good. So I've reused these numbers because it's a consolidated company now, so I can't really use the 12 months. I want to use the Q2 numbers because the company is 2-in-1 now. So the margin has to be looked at holistically, and taking 12 months from that. So EBITDA margin 28%, gross margin 51%. This is excellent. 28% EBITDA margin is a cash machine. And then the wild card in my valuation, and by the way, 42 is It's not expensive. It's not expensive, but it's slightly more expensive than your average hypergrowth stock that I look at. But this is a very high quality stock in the field. So I will say both are cheap. 0.29, of course, would be much cheaper than 0.42. What's the difference between these two on my EV over GP over RG valuation? Well, it's the forward growth rate. What's the forward growth rate going to be? I have no idea, and so if you look at the number, if you look at just the beverages themselves, the change was 41% year over year. And so if you tack in some law of large number and you start thinking, you say, okay, we should decelerate next 12 months. So a conservative 35% for forward 12 months growth would be good. But I also know that Alani is growing faster than Celsius, and this company is getting out of its inventory issue. The inventory issue is not going to be a problem anymore going forward. So it could also grow 50%. So if you think the stock is going to grow 50%, this stock is I'm going to call it very cheap for the quality. If you think this stock is going to grow 35%, this stock is cheap for the quality. And keep in mind, I'm using the $53 price of today. Who knows what this is going to end at the end of the day. But I'm happy to own this stock. This is one for the long run. The beverage space is highly uncorrelated to a lot of the other companies that I have. Frankly, it's the only company that is I have a lot of medical stocks trade together. I have a lot of Bitcoin-based stocks. Bitcoin-based stock trade together. This one is energy drinks. It doesn't really trade much with anything, and so it stabilizes the portfolio. I'm happy to own Celsius. Congratulations, Celsius, on this quarter. This was not financial advice, not investment advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.